looks good on my end. My levels look pretty good, so everyone should be good. Let's get going. Trap Cracker, how do I sound, bud? Can you hear me? You guys got audio? Loud and clear. All right, well, let's do this then. Switch over to the main camera. Small crowd, 3 people. Well, welcome. Doesn't matter if it's 3 people. Doesn't matter if it's 1,000 people. I am ready to rock tonight. Full disclosure, I've had myself a day. I am sunburnt. I've been at the beach. It's my son's 2nd birthday. I've been partying. I've been getting after it today. But, I mean, as you saw in the title, today is 4 years to the date that I posted my first YouTube video ever. So that's kind of cool. Something to celebrate, something I'm excited about. I hit 90,000 subscribers yesterday, which is also super humbling and pretty awesome as well. Carlos, what's up, buddy? I got myself a couple more beers. I got myself a red, white, and blue here. I got some Telemador whiskey over here. I got some White Claws. So there's a bunch of stuff that we'll be doing. Last time I checked, I hadn't gotten any voicemails yet, but somebody did text me and say they were going to leave a voicemail. They had a good one. So hopefully we'll check that out. If there are any questions with the 3 of you, if you are watching on your phone, the chat doesn't pop up right under the like and the dislike button. After you click the like button, you can click live chat. It'll open up on your phone. If you turn your phone sideways, that chat will show up in the bottom left hand. I love the way you talk about your dad. Thank you so much, Carlos. My dad's a good dude. I got that PBR back there. I'm going to drink that beer with him one day. Can't wait. So thank you guys for being here. Yeah, this is gonna be a great live stream for me, whether it's short or not. I said I'm super humbled by the success I've had on YouTube over the last 4 years. Some people were talking about. Some people had seen that first video that I made, and you came a long way. You know, that's something to be said for that. You have to understand that when you start things, the first couple videos are probably going to be pretty cringy, and my first YouTube videos were very, very cringy. Anton, what's up, buddy? Thanks for coming. Sorry I had to take down that video. People that weren't in the chat took it the wrong way. They really thought I was like attacking you when we talked about personal finance taught in schools. I guess it was one of those things that just got lost in translation when I was able to say, like, it's not that big a deal, not too serious. But I posted that video, but then I had to take it down. I apologized last week if that came across like I was busting your chops, but cheers. If anybody has any questions, guys, I had a great question that was emailed to me, which was a question about weeklies versus monthlies and which is more profitable and why people would choose monthlies or weeklies or one or the other. I definitely want to get to that, but I definitely want to take care of you guys here in the chat first. If you do have any questions that you want me to answer, as you saw or have seen over the last couple of weeks, the content that I've been posting has been right from here, because I think the best thing about YouTube is we get to educate. And instead of me coming up and thinking of things that you might be thinking about, it's so much easier for me to take direct questions from you and then answer them like right here in real time. So I do have a couple videos that I have recorded that want to come out. One of them was going to be a sponsor video, but I love when you guys ask me questions. I really, really do. Jeremy, thanks so much. Yeah, I didn't realize how big the body of work that I have is. And I probably have about 100 unlisted videos. And I probably have about another 25 private videos that I don't even show. Why would I unlist a video? Sometimes I've unlisted a video if I remade it, like when I got better quality audio or something like that, or I made a mistake and then I updated it, but still there was other things relevant in there. So when I post an unlisted videos, if I send the link out, you can see it, but it doesn't show to the general public. And I probably have about 100 of those right now. And then the private videos are just things that like I want archived for my family, like singing happy birthday to my daughter and things like that. So yeah, the body of work it's been awesome. Robin, how are you tonight? Robin, thank you so much for being here and your endless support for me and my community. Robin, thank you so much. I've watched almost every video. Thank you so much. That's more than a lot of people can say. It really is. That's more than a lot of people can say. So I have my computer open here. Let me just see if anybody has left a voicemail. If somebody's left a voicemail, maybe we'll get to that because it doesn't seem like there's that many questions here in the chat. Like I said, for those of you that just got in this morning, I did not have a voicemail. Oh, looks like we do. I only wanted you to take the video down because it caused some privacy concerns. Oh, I got you. Yeah, no, that video had to come down. Sometimes I wear my heart on my sleeve, and some things just aren't made for YouTube. And I think that was a conversation that was best kept in the chat, best kept for live. And yeah, it wasn't worth. There's some things that just aren't worth debating. I found out in social media, and if you want to get into social media, here's like a good rule to follow. If your opinion can't change anything, then it's probably not worth saying publicly. Like I'm not talking about personal life. I'm not talking about family. I'm talking about, like, for me, when I'm on Twitter and I read something, or whether I'm in Instagram and I read something, or even here on YouTube, before I post something and before I press send, most of the time I ask myself, will my voice make a difference, or am I just spinning my wheels here? And that was one of those cases where I could debate till I was blue in the face about personal finance in school, and it was never going to change anybody's opinions, anybody's mind. So those opinions are usually best kept to myself. Sometimes, it's worth speaking your mind, and that's one of the beautiful things about being here and being where we are, is we get to voice our opinions. But that one was, I was being an asshole, if I can be honest. I was out of line. Speaking out of line, I had a couple beers tonight. Let's play his voicemail. I haven't heard it. It's 41 seconds long, so before I play this voicemail, just know, please, I have not heard it yet. If something goes down, I'll press pause and we'll pretend like we never heard that before. But yeah, I think let's listen to this voicemail. Maybe it's something good. All right, so if you saw that look on my face, it wasn't because I disliked the question. It was because bull put spreads require a lot of thinking. I've been partying all day, but luckily for this gentleman, I love talking money at parties. So I think this has to be a whiteboard kind of question. I always have it plugged in. I'm going to break down the bull put spread for you. And it seems like he had a question on, oh God, I can't get this pen out. People ask me all the time, like, what I use to write on YouTube, guys. When the program that I use this Wacom tablet, which is pretty much just a digital art. You couldn't hear the question? Oh man, no? Was it too quiet? Robin, was it too quiet? Because I'll play it again. Oh man. Let me see. Robin, can you let me know, like, if it was too quiet? Shoot, that's a bummer. No audio. Shoot, and 2 makes 8. Okay, hold on a second. Let me see. Okay, sorry guys. Let's try that again then. It's on a bull put thread, if you guys are curious. All right, so wait, let me try and play that again. It's showing that it's reading on my end. Hold on. Oh, no, it's not. Okay, hold on a second. Let me just, 2 seconds. Let me just scroll through here. This is not a big deal. I know how I can fix it. Inputs. Live streams. That's what I have to do. Sorry, guys. I had the wrong input. Here we go. So nothing should have changed on your end right now. Let's try that again. It's a good question. Sorry about that, guys. This is Charles. This is an awesome question. So as you'll see, it requires a lot of math. But here comes. You should be able to hear it now.
Hey, Brad. For an option strategy on an expensive stock like Facebook, a covered call strategy or even a leaps option can be a bit expensive. I want to try using a bull put spread, which gives insurance against potentially having to buy the stock. But how much insurance do you really have? Suppose you have a short leg of a stock at a strike price of 100 and a long leg strike price of 95, and the stock closes at 97. What happens? Do I have to buy the stock? Nope. I viewed your video on put call spreads, right, but it's not clear what happens if it closes above the long level. Thanks, Charlie.
All right, so I hope you guys got it that time. It should be good. Guys, the bull put spread, and like I said, this is going to take a little bit of whiteboarding. So I'm going to switch over to my digital whiteboard. That's one of my favorite things to do. There's going to be a lot going on, but for those of you that know options, you know this. I'm going to touch upon a couple of things that he just said. First, things are expensive. Number one, if something's too expensive, that doesn't mean that you should resort to a less expensive option. And I'm not saying like that's what he's trying to do here. I understand he's learning. He's asking a question. Awesome. But let me put it in realistic terms. If you were to say, I'm living at my mom's house, I'm trying to buy a house, but a house is really expensive. So I'm thinking about buying a tent and living in my friend's backyard. Can you go through the pros and the cons? Right? That seems silly, right? You'd say to that person, I think you should probably save up a little bit more for a house and maybe live with your mom and dad for a little bit longer. The tent might not be the greatest option. When we compare buying 100 shares of Apple or selling a leaps against Apple and that being expensive, granted, some things are expensive, but that doesn't always mean that we should resort to a less expensive option, and that's going to be good for us. For those people inside my Discord, you know that I hate short-term spreads. Hate's a strong word. I really dislike short-term spreads. I trade the poor man's covered call, which even though it's considered a credit spread, know this. I buy leaps options. That's it. And then later on, if I can buy or if I can write a covered call against it and make that credit spread, I do. But I never set that up all at once. I'm not particularly in favor of spreads. Now, this particular case, and I think I have my terminology right because there's so many different names of spreads. But to me, this is just a vertical spread. So a poor man's covered call is going to be a diagonal spread where we are going to have different strikes at different expirations. So their expirations are apart from one another. In a vertical spread like this, in a bull put spread, we're going to have the same expiration, different strikes, same underlying stock. All right. And by bull, we think that we are going to be neutral to bullish. We think the stock is going to go up or stay pretty flat. That's going to be kind of our goals here. That's what we think is going to happen to this stock inside a bull put spread. So let me just switch over to my whiteboard and I'll start to put some things onto paper, quote unquote, and we'll see if I can kind of write this out. Because the main question that he asks is, what happens when the option finishes in between the two strikes that we choose, right? Because it's pretty clear cut. If the share price finishes above, then we know everything expires worthless and we have max profit. If it finishes below, okay, we start to accumulate some max loss. What happens in between? I think he said $195. What happens at $97? Do we lose or do we win? So let me write some things out and then I'll draw the profit and loss graph. And guys, remember, please, I've been partying today. I'm going to do this to the best of my ability. So a couple things. He said that he's in a bull put spread. So let's write this: bull put spread. Okay. So essentially we want the stock to go up, right? We think the stock is going to go up. We are going to buy and sell puts in a spread. You need to buy an option and then you need to write an option. Okay. And then the spread, meaning we're going to have two different strike prices. All right. So now what's next? He said the short leg, and short meaning this is the one that we write, and AKA this is the one that we sell. So this one should be for some sort of credit. And he said the short leg was going to be for $100 strike price. $100 strike price. Okay, cool. Now he said he wants his long leg. So when we say we are long, that means we bought. That means we are going to pay premium. And he wants that to be $95. Okay? So that's pretty much where we're at right now. And he said, what happens if we end at expiration at $97? Do we lose? Do we win? How much do we lose? How much, like all these things, like what happens in this particular case? What we need to know first and foremost, because he said, do I have to buy shares? In a spread, there's never going to be a transaction of shares, okay? There is only going to be a transaction of money and a transaction of options, contracts. Remember, and you've seen this in videos, when we are going to trade options, there's a difference between buying and selling an options contract and buying and selling shares of an underlying stock, okay? So let's say, for example, this one right here gave me a credit of $3.20. So $320. And let's say when I wrote this, I had to pay a premium of $1.30. Okay? So we can see that this is going to be a credit spread. I am going to net credit $1.90, or in options term, $190. Okay? So this is a credit spread. Just like the poor man's covered call is a debit spread, meaning we pay more premium than we collect, this is going to be the option. And it's totally enticing. It's like, oh my gosh, where can I go wrong here? This seems really awesome. This seems really, really good. I don't particularly like it. All right. Because when I trade options, I like to exchange shares. I want something to happen with shares. Money's good, but shares is great. When you get burned on a spread, you lose money. You're like, damn it, what the hell just happened? Okay. So now let's change the color here. This right here is going to be max profit. Whatever happens, this is going to be max profit. And this is if the share price at expiration is above $100. Because then this expires worthless, and we're out the door. Okay? That's exactly what we want. Now, what's max loss? Okay, let's come under my picture here. Max loss. That's going to be the difference in the strike prices minus your credit, okay? So if the difference in my strike price, we have a $100 strike price and we have a $95 strike price, okay? And then we minus out that $1.90, that was the credit that we had. So our max loss is going to be what? $310, $3.10. And for those of you that are new to options, why am I writing it as $3.10? An options contract is 100 shares. So we're just going to have to multiply all of these values by 100 because they're written in a case of dollars and cents, okay? So let's reiterate what we're talking here. He has his short leg. Short means he wrote a call, so he collected this. Long leg. So now essentially what happens is if it goes up like he thought it would, because it's a bull, he thinks it's going to go up. If it goes up, it expires worthless. He puts $190 in his pocket, money in the bank, shorty watch drink. All right? Now, the reason that he bought this long leg is for downside protection. If he's wrong, if it goes down below $95, he's going to collect money, but not really. It's just going to offset the losses by this short leg. All right. I hope that makes sense so far. Queenie, welcome to the chat. All right, so now what exactly happens here if it ends up being in the middle of these two? Well, let's write a profit and a loss graph. All right, so I can't see my picture on the screen, so I'm looking at the screen to make sure that I'm good. All right, so we have our two strikes. Okay, we have $95 over here, and then we have $100 over here. All right. Now we know, let's say this is $100, this is $1, this is $2, this is $3, this is $4, and then here we're in the whole 100. We suck. We lost 200. Oh my God, I'm getting divorced. We lost 300. Oh my gosh, I hate myself. We lost 400. Okay. Now back to what we just said. Max loss is $310. Right? 310. We suck. 310, Brad, not 301. Okay. Now our max gain is that profit that we were talking about before. So the 320 minus 130, I think I used, that is going to equal 190. So right here. Now, the graph now is going to do something like this in between the two strikes. So right here, this is essentially break even. Okay. Now, how do we calculate that? Well, that's going to be the strike of the short call. The short put, sorry. Strike of the short, which is 100, minus the credit, which is going to be, what, it was $1.90. So that leaves me with like 98 and change, 98.10. 98.10 is my break even. That's right here. 98.10. So as long as it really stays above 98.10, I'm not going to lose any money. But since you asked about $97, what that's going to mean is it's going to be somewhere in between max loss and just a little bit of loss. And we can calculate that as well. Let's calculate that after I have a sip of beer. So at $97, the short put is, all right, let's see. Let's write this over here. At 97, the short put, that should you win there? Yeah, you're going to win on that. You're going to win on that 20 cents or $20. The long put, sorry, I keep saying call. The long put is going to lose you money. $1.30. So it looks like if at 97, you are going to lose $110. So it's not max loss, but it's also not, break even. Now, how the heck did I figure that out? Essentially, let's look at some strikes. Some strikes that could happen. 101, 100, 99, 98, 97, 96, 95. All right, now we could kind of think about like what might happen here. Well, we know that if we are above $100, we are going to be at max profit, okay? So that was really like 320. And then, so that's the short call. And the long call is going to be 120. Right? Is that right math? Something like that. Hold on. I think that's wrong. Let me see here. Let me see. At 102, we had, oh man, go back to my pen. 320. And then it was a 130 loss. Okay, so I got That 190. Okay, that's perfect. That's more right. Then at 101, I still get 320. At 100, I still get 320, right? But now, once I get to 99, I'm going to lose money on that credit. And it's going to go down to $2.20. $98 is going to go to 120. 97 is going to be 20. So for every dollar it goes down, we lose $1 in premium. Okay, good. So that was right. And then at 96, I'm going to be at minus $80. And guys, this is all the short put. Okay. And then 95, I'm going to be minus 180. I hope this is right. Now for the long put, I'm good till all the way down to 95. So I'm at at 130, $1.30, $1.30, $1.30, right? Because anything above 95, I'm going to lose all of that I paid, right? So right down to here. So that makes the total profit, this should be 190 because that's out of the money. This should be 190 as well. When I get to 99, I should be at a $90 gain, right? That would be right here. So that's in this zone. At 98, I should be at a $10 gain. And then at 97, I should be, oh no, this should be a loss. So at 98, I'm at a $10 loss. There we go. Yep. So here's at 98.10. And then at 97, where he mentioned, I'm going to lose 110. So yes. So that makes things right. Oh, that's disgusting. Let me go back and write that again. And that's what we just calculated here. So that's essentially how we figure out the profit and loss. Oh, 98. Oh, I'm sorry. 90. I'm sorry. I got a freaking, my bad. Thank you so much, Jeremy. I'm sorry that's not visible. Let me see if I can bring this up a little bit. Okay, sorry about that. So now that should be a little bit more visible. So yeah, so essentially the long and the short of it is that when we write a spread, there's different ways we can calculate the break even. So this is going to be important for figuring out our break even. The strike price of the short minus the credit. That's here. You just pretty much take this and know that if it finishes anywhere between here, if it finishes a little bit above the break even, you are going to be okay all the way up to 190. That's your max. And then once it goes below the break even 98.10, you are going to lose some money until we get to 310, our max loss. And I'm sorry if some of those numbers weren't correct, guys. I just did that off the top of my head, but everything looks about right. But the thing, when he said, like, am I going to have to buy shares? The answer is no. You are not going to have to buy shares because of right here, okay? Because when this happens, the spread is going to be assigned and exercised all at once. If this call or this put is assigned, they are going to automatically exercise this one. And you're going to take a loss on this one of 130, and you're going to take a gain on this one of 20, which is going to give you your net. You're never going to have to buy shares, okay? You're never, ever going to have to buy shares in a spread, and you're never going to have to sell shares in a spread. All you're going to have to do is lose money at max loss or gain money at max profit. I really hope that answered your question. If it didn't, I apologize. There's a lot going on with that. It's kind of why I don't make too many videos on spreads. I also don't trade spreads very often, so that's another reason I don't try and do stuff that I don't particularly do. I don't want to make videos on stuff that I don't particularly do in my own personal life. Switching over to a White Claw. Greg asked, I was wondering about rolling winning trades, mainly in a cash secure put. But you'd have to define to me, what do you mean by winning, losing? If you're winning, why would you roll it unless you want to keep winning at a different, I don't know. If you could just be, Greg, a little bit more specific, I'll gladly give my opinions. But I roll everything. I never get to expiration. And if I could talk about that for a second, because so many people, I guess it came up in one of the videos when I said that I always close things by Wednesday, and everyone said, like, why is Wednesday the day? Wednesday's not the day that I close. It's more that by Wednesday I close. All right. And if expiration is on Friday, by the time I get 2 to 3 days out, I want the thing out of my mind. All right. And it's not because it's most profitable. It's not because I'm going to make the most money. It's because if I'm winning on Wednesday, I personally, from experience over time, know that so many stupid things can happen on Thursday and Friday to mess up something that's going awesome. I'd rather take a little bit on Wednesday in my favor, a little bit of gain, than have a little bit of gain on Wednesday, hope for a lot on Thursday and Friday, and have that not happen, and then everything goes to shit. I just don't want that to happen. It's easier for me to take a little bit on Wednesday, roll it out a week, and then deal with it next week. At least I have some more theta, some more time on my side for things to go right. That's really the only reason why I'm trying to get out. I don't want to have to worry about Thursday and Friday. I really don't. How many times have we had a super green day and then Friday's a super red day? Like, I don't have time for that. I don't want to think about it. When we write calls and puts, we want to collect premium and we want to get the hell out of that trade as fast as possible with as much of that premium in our hands as possible. That's why I roll them out. Do you ever trade leveraged ETFs? No, I do not. I tend to not trade ETFs at all. Volatility low, premiums low. Tends not to be a good ROI, even on the put side. That's about as much research and thought I've given to it. I mean, I can't say that I couldn't be talked into trading leverage ETFs. There's just better things that I've come across, and I've been wrong before. Maybe one day someone's going to write down or talk about something, and I'm not going to know they were talking about a leverage ETF, and I'm going to be like, oh my God, that was the most amazing thing ever. And he's going to say, oh, that was a leverage ETF. And I'm like, son of a bitch. This whole time I've been just pushing leveraged ETFs off on the wayside. Maybe that will happen. I don't know. But right now, Anton, this is not something that I do. A White Claw. Yeah, Ryan, what's wrong with a White Claw? Listen, if you knew the damage that I've done today, a White Claw is especially a raspberry. A raspberry White Claw is a delicious, delicious treat for right now. How should I choose a good stock for the wheel? Talk about the wheel strategy a lot. It depends on if you're going to start with the put, if you're going to start on the wheel. But I can't tell you what stock to buy. I can only tell you that I tend to trade the wheel with stocks that trade relatively flat and dividend stocks. And we've talked about that at length. That's really what I trade the wheel with. People can choose otherwise. I trade the wheel with stocks that trade flat and dividend stocks. Rolling a trade won't count towards the day trade counter. I believe if you lock in realized profit loss, I'm still looking into it. If you buy and sell on the same day, it is a day trade. It doesn't matter if it's a stock. It doesn't matter if it's an option. It doesn't matter if it was heavily profitable. It doesn't matter if it's a loss. If you buy a security on a day and you sell it, or if you sell one and then buy, that is a day trade. If you buy a contract and sell it, that is a day trade. If you buy a share and sell it, that is a day trade. Now, I know that Robinhood hates that, but I think the threshold is like $25K. You can get away with that, right? Once you get to $25K, I believe in Robinhood, you could day trade as much as you want. Webull, you can day trade as much as you want, I think, with any amount in there, but they don't, from what I've seen, brokerages don't really care if you profit or loss from a trade. They just care that it's a day trade. I like to close Tuesday, Wednesday, and then day trade for a few more dollars the rest of the week. Go for it. Go for it. How you spend your money is all up to you. Greg, thank you so much for reminding everyone to please smash the like button. Do you have a cutoff point for losing a covered call position, or do you just roll it up and out for a credit? So when you say covered call, I assume you mean the wheel. I never roll wheels, ever, on the put and the call side. If I write a call or if I write a put, that's going to expiration. Unless I profit, right? If I profit, if I'm up 70%, then I'll roll it. But for a loss, I'm never going to roll at a loss because I don't fear assignment in the wheel. In the wheel strategy, I like to get assigned because there's higher premiums at the money. So I don't really care about delta. I don't care about anything like that. When I trade the wheel, I just get assigned. But as far as rolling out as a cutoff, yeah, 70 to 75% generally for my calls and my puts when I trade the wheel. If I'm doing the poor man's covered call, it's going to be like 45%. If I could take 45% of the premium, put it back in my pocket, I'll give some back. Not a big deal. I'll roll it out. I'll take 45% all day, and I'll take definitely take 75% when it comes to the wheel strategy. Down to for a poor man's covered call. Yeah, for a poor man's covered call, cutoff's going to be 45% because you have to protect the leaps. Whether it's a put leaps or whether it's a call leaps, when you buy an option, that is the thing that's going to make you most money. Extrinsic value is going to be a beautiful thing. Intrinsic value is a great help too. But yeah, if I'm going to get to that, my cutoff is going to be like 45%. I mean, does sometimes I wake up in the morning and it's at 60? Yeah. It's not like for the poor man's covered call, I don't do limit orders like I do with the wheel. The wheel I'll put in, as soon as I write that call for the wheel, I'm going to put in a 75% limit order. But for the poor man's covered call, because I monitor those a little bit more because I'm monitoring them with the leaps in mind as well. I don't really put in limits for that, but generally, like if I wake up in the morning, it's at 60, I'm going to get out. Doesn't matter what day it is. It really doesn't matter. I'm going to get out. I love 100 shares. Webull, you have to have 25K or cash or a cash account and enough to cover the transaction and clear before you trade again. Okay. Thank you very much, Robin. Did not know that about Webull, and I've never had 25K in there. I think Robinhood's the same, probably 25K. So I was poking around Stock Rover today. Lots. There was a tad overwhelming. Would you be open to doing an overview of Stock Rover? What do you look at? What you don't? Doesn't have to be tonight. Yeah, I can bring that up quick. That's not a big deal at all. So, and I've kind of mentioned that with Stock Rover. Let me bring that up and bring it over here. It's like, what did I call it? I think I called it the Cheesecake Factory menu. That's really what it feels like to me sometimes. I tend to only use it. I have the research reports. That's the account that I opened with them. So let me just bring this over here. The dual screen life, bruh. Dual screen life. Why can't I get out of this? Technology, dual screen life. Effing with my program right now. I gotta get out of IPvo. That's what it is. Okay, here we go. But you can't see what I'm looking at yet because I have to go over to my desktop. So this is very, 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 very overwhelming. Let me make me small. You, Brad. No, not you. Oh my gosh, you gotta go smaller. Okay, we'll make me smaller for now. This is super overwhelming. Yes, it is very, very overwhelming. And there's so much going on here that I'm sure the people are like, I didn't even know what to do. And you guys can't see. Let me, why is it? I'm going to try and make it so you can see the whole screen. Because I screwed myself over on that before. Okay, here we go. So like over here on the left, you can see like there's so many different comments and you can make so many things happen. Somebody give me a stock though. I'll show you what I use it for. Jeffrey, give me a stock that you want me to look at. So because right here, I have Vuzi up here. Actually, I want to put one in actually. You guys want to know something that's on my watch list right now? Volvo is definitely on my watch list. Oh, HPQ. Yes, I have them. I'll put HPQ because somebody said that. HPQ. You guys know how I feel about the HPQ. All right. So when we look at HPQ here, Budweiser, you can go definitely not Helion. Oh my God, definitely not. So you can take all these things here and it's crazy. But essentially what I use is the research report because granted, you can come through all of these things and look at each one. When you click research report, it's probably going to pop up on my other screen, so I might have to bring it back. Let me just see. Research report. What does it? Loads, but it loads in real time. Okay? And then you can request this as a PDF, but essentially what it does, this is an 8-page report of just this stock given in real time, September 19, 2021. That is the membership that I have with them. All right. And that link is down in the description below, guys. You can do a free trial of this for 7 days. As I said, poke around, see what it is. But at the end of the day, I have this particular membership. And we can see all the things that I love about them. Their buy, hold, but over here, their valuation. This is a value stock play, guys. It really is. It's a huge value stock play. Down here, they give a peer analysis, growth summary, quantitative scores, different things like that. Earnings, risk, over here, profit. It's a lot. This is for like uber nerds that really, really want to know their companies. It's as simple as that. If you don't really care that much about like knowing the companies, then you can probably find information on Robinhood. But this is the only paid service that I use as far as like analytics and things like that. But yeah, no, I can definitely like break down, Jeffrey, the things that I do in here and the things I look at. And also out of all of this madness, I can go through the things that are really, really important to me. Okay. I could tell you about the things that I look for. Like what of these things are fluff? Like, do I care about peer analysis? Not too much. I don't care. That's like, I don't know how to give an analogy. You know, I love analogies, but I don't really care what everybody else is doing in the space. If I'm looking at a company, I care about what they're doing, right? I definitely look at value. I definitely look at PE, things like that. Though some financial metrics I definitely want to look at. I look at growth. I look at free cash flow. If they're a dividend stock, I look at the dividend payout in relation to the free cash flow. Things like that I'm going to tend to look at. I want to make sure they're not diluting shares, things like that. So yeah, I could definitely do a stock Rover video and we could break that down. And you know, I will tell you this from a business side too, and this is not to sound like a sellout. It's hard to do like reviews on one particular program when creators like us are trying to get sponsorships and things like that. So Stock Rover is a company that I love. JJ did a sponsorship with them, and that's how I found out about it. I used his free trial and loved it. Stock Rover is somebody that I'm like actively trying to be like, yo, give me some money to make a video. So it'll come, Jeffrey, one day when I can sell out, and we'll see what happens. You also have to have 2K just to trade options in Webull. Is that? I don't know if that's true. Maybe it is. Wow, 2K, that would be a lot. Helion. Oh, gosh, Helion. Sorry, guys, I'm just reading. Do you have a rule of thumb for earnings to dividend payout? I don't, because I'm not a dividend investor. So it's not something that I really look at, but I definitely want dividend payouts to be like less than half of free cash flow. If we're sending out more than half of our free cash flow to dividends, that's going to be at least something for me to look at. It's going to be a little bit of a red flag for me. But the fact that I only own, what do we say? I own 10 stocks. Let's look at all the stocks I own here. Let me log in. Let's look at all big old Brad Finn. Everyone's like, oh, can you do a portfolio update? I'm like, you do understand that would be like a 3-minute video, right? So, oh man, I'm back on. Damn it. So this is literally, as they say in Britain, literally every stock that I own. Okay. Individual stock. This M1 Finance is everything. And I'm over here looking at my screen. Sorry, I'm not looking at you guys. But Disney, Tattooed Chef, PayPal, Tesla, Visa, NVIDIA, Vuzi, Google, Starbucks, Facebook, and MasterCard are the only stocks that I own. Individual. I mean, we can look at Robinhood if we want. I mean, if you count like my Robinhood stocks and the things that I'm trading in Robinhood, we could see right now in Robinhood. Let me make this a little bigger now that we can. Sorry, guys. Zoom in here so you can A little bit more. Oh, I gotta make me bigger too. If we count those stocks as like stocks that I quote own, I guess you could say that. Okay, I own a bunch, but I have a bunch of naked leaps, and we can talk about that in a couple of minutes when we talk about my plans for this week. But if we go in addition to these 10, 11 stocks or so, I have Pepsi, Waste Management, and HPQ. All right, so that's really it. So I don't worry about dividends and payouts. It's just not something I care about yet. One day I'm going to be a dividend investor and I'm going to care about that, but right now I'm not a dividend investor, and I don't care. PJ, I know a lot of people that trade on Webull and love Webull, and good for them. Every platform has its pros and cons. That's why if you haven't used like YouTubers' links and like checked out and gotten your like free shares and at least tried it out. I have 10 brokerage accounts, not because I want 10 brokerage accounts, because I opened them up to get free shares. And once I got the free shares, I tried it out for a little bit, and I was like, I hate this, don't hate this. Like, you should definitely try Webull. You know, I'm personally an M1 Finance fanboy. Going to FinCon this weekend, I can't wait to like go up to M1 Finance and be like, hey, M1 Finance, you want to give me some monies? Want to give me some money to make a video? Got these index funds in there. Did you say you have naked puts on Robinhood? No, I don't. No naked puts for this guy. What do I have in Robinhood right now? I do have a put open on Robinhood. I have, let me see. Back to the desktop. Right here is a Vuzi put. We can look at that and open that up. It is it's a $10 strike. It expires on 1/21/22. You're like, holy cow, Brad, why so long? We'll talk about that in the video I have coming up. But yeah, no, I don't sell naked puts. I just don't. I have margins accounts if I need them, but I don't sell naked puts. There's no need. Do you trade differently now after the virus hit? Nope. Nothing has changed, Anton. Nothing's changed at all. As far as what's going on globally, I'm a long-term investor. And I would like to believe that in 20 years, we'll look at the last 2 years and it won't even matter, frankly. That's really, and this is the same like talk we have when everyone's like, oh, the crash is coming, the bubble. Like, tell me why. Tell me why. I just don't, nah. To answer your question shortly, no, I don't trade differently. I trade on numbers, and numbers don't have emotions. And does the pandemic and COVID change the numbers? Yeah, but it's all data driven. It's all visible. You can see it. You can stay away from it. Do I think that we need a correction? I pray for it. Mostly just to weed out some of these clowns on YouTube. Like, I dream of it because people are going to show their true colors of do they know how to make money in the markets when we're in red, when we are bear. You know, that's when you're going to find out the people that know what they're doing and they know what they're talking about and the people that don't. So, yeah, I very, very good at trading without emotion. And I think COVID, politics, the election, there's going to be something every single day. If you're going to look at the news and think that that's going to affect things on a long term, short term, absolutely. Absolutely. Things can be varied short term. But when you're Brad Finn and 96% of your money and every single time you make money, you just buy VTI. Buy VTI. Oh, I got some money, I'm going to buy VTI. Oh, it's my birthday, somebody gave me money, I'm going to buy VTI. I'm going to buy VTI. That's when your philosophy is that, and then like you find some like crumbs and you're like, ooh, let's trade some options and have some fun because you don't watch sports, because you don't gamble, because you don't do like let's have some fun. You know? That's a really, really great, that's my philosophy. You know? Everything needs to be, the foundation has to be long-term index funds, broad-based index funds. I know you said for a poor man cover call, you have to protect those leaps. Damn, Skippy. But hypothetically, what happens if the call you sell expires in the money and is assigned. Jeremy, number one, never going to happen for me. I can't say never. I mean, essentially what happens is if it's in the money, your short call gets assigned. Your brokerage is going to automatically exercise your option, and your profit is going to be the difference in strikes minus the premium that you collected, just like any other spread. So that's the book definition of what's going to happen. I'll say that slower. If in a leaps option, in a poor man's covered call, the share price goes above your short strike. Whenever we say short, that means the written one, the sold one. If the strike goes above that, you are going to get exercised, and you are going to have to sell 100 shares. But you don't have 100 shares, right? So to cover the 100 shares, your brokerage is going to exercise, not sell to close, but exercise your long leaps option. And your profit or loss is going to be the difference in the strikes minus the premium you paid, why in my Discord and everywhere else, I preach that when you write a short call, the amount of the difference between the leaps and the short call times 100 better be greater than the premium that you paid for the leaps. If so, you cannot lose. You cannot lose. I say protect, fine. I say protect because I want you to make a ton more money on the leaps. I want the leaps to keep going. But if you paid a $500 premium, right? You paid a $500 premium, $500 for the contract, and you write a short call that's $6 above that strike, you can't lose. You're going to make $100 upon assignment. You cannot lose if your short call strike is the difference is more than the premium that you paid. So that's what's going to happen. But like I said, I'm not going to do that because if it's going up and it's getting close, then I'm going to roll, and I'm going to roll at a loss. And sometimes you can even roll at a credit. So if I buy to close at a loss, I'm going to sell to open further down the line or up in strike, and I'm going to get some money back. And most of the time I'm going to credit anyway. But no, don't let it get assigned. I mean, if something wacky happens, like let's say you went for that point, because when I do the poor man's covered call, that delta's 0.2. Let's say, let me get out of this screen. This is ridiculous. Let's say like something ridiculous happened. So you did a delta 0.2 at a strike of $100. And then this weird, wacky news came out, or it was the next Wall Street bets, and it went up to like $200. And now it's going to cost you $1,000 to close it. Yeah, I'm going to just take the loss on that. But, I mean, I don't tend to trade with the stocks that can necessarily do that. But I hope that answered your question, Jeremy. If you need a follow-up, just let me know. A lot of things I don't like about Webull. PJ, I'm with you. It's not for me. Webull is not for this guy. Fidelity. I hate Fidelity more than Webull. The fact that when you're looking at your positions in Fidelity, and I talk to JJ about this all the time, when you're looking at your positions in Fidelity and you have an option open, the fact that nowhere on that screen it tells you the current share price bothers the ever-living crap out of me. It drives me bananas that I can't be like, oh, here's my strike price on the option that I wrote in Fidelity, but I have no idea what the share price is currently. That's just asinine to me. I hate it. Yeah, PJ. What stocks did you get? Right on, Jeremy. Right on. Robin. Yeah. I don't hate Robinhood. I'm not a hater of Robinhood. Everyone wants me to be. And every single time somebody drops some hate on Robinhood, I give them the facts. And they're like, but if somebody in here hates Robinhood, please, I've been drinking today. I would love to debate why Robinhood sucks. It does not suck. It does not suck at all. All right? It's a little suspect, a little bit seedy, but it doesn't suck. And if you want to tell me why Robinhood sucks, go ahead. I love it. I love it. Tell me what you wish was better about M1 Finance. M1 Finance, for what it's advertised to do, cannot be beaten. It is advertised as long-term, buy and hold, retirement, auto, robo investing. Frankly, I don't see anything that M1 Finance tries to advertise. I don't know. And not to mention their margins a better rate. They have a credit card coming out, which is going to be awesome cash back. M1 Finance is a sleeper. It is probably one of the best if you're long term. Like, that's what I am. If you want to trade options and you want to buy and do these things, yeah, M1 Finance is going to suck. But if you're trying to like build a future and build wealth, even though some administrations want to tax the wealth, I mean, you can't beat it. I don't know. Tell me why. Tell me why it sucks. I tried to hate Robinhood, but I can't. I never even tried to hate it. Why do people hate it? Because of GameStop and ANC. But you didn't read the fine print. But I loved it for so long before that even though like people were pissed about the AMC GameStop thing in February, I mean, that was February. Even my buddies are like, never again. They're back. They ditched it, but they're back. What are you going to do? Public? Good for you, bud. Good for you. Robinhood stock? Nope, not touching it. There's a very, very big difference between stocks and their products. For example, I love the Tesla car. I'd never own their stock. I love Apple products. I probably wouldn't buy their shares. You know, like just for value purposes. But not Robinhood. I'm not touching with that with a 10-foot pole. I'm not going to wheel it. You can wheel it. I'm not going to wheel it. A leap's at the bottom of a pattern and breaks down. I'm not sure what you mean by that. I'm not really a big technical analysis guy. Short put is such SP. I don't know you lost me, bud. SP is such the writing. You lost me. Maybe I'm drinking. I can't read. SP is such the writing the covered call at the point breaking. Lost me, bud. Can you reword that? Oh, gosh. I should do better with charts and indicators. Not me. I'm not really a technical analysis guy. I mean, I wish I knew it because people ask me questions on it. And I'm just like, hey, head to the Discord and talk to the smarter people on there. No, they were not. They're just the one on the news. ARKK. What is ARK trading for? Because since I stopped doing videos on I remember when I bought them as far as like the challenge portfolio, just because I wanted to prove a point. What are they trading at? 121. Oh, they bounced back. They've actually bounced back a little bit. Good for them. What are they trading on January 1st? I thought, 140. They're still up for the year. Good for them. Last 365 days, ARK still up 33.72%. I'm not touching any of that. Oh, strike price. Okay. Strike price is such the writing, though. I don't get that. Is such the writing? I don't know what I'm saying. I have my rollover IRA and Fidelity. So good with it. But I can roll my options. Yeah. Fidelity's good. Challenge. Thank you, buddy. Appreciate it. Nope. What else do we got? Any other questions, guys? Any other questions? My main thought was that you would need the money on hand to buy the 100 shares for the leaps. But it sounds like on assignment, exercise leap. Yeah, once again, in a spread, you do not need to buy or sell shares. The contracts themselves cover themselves. Now, there is some brokerages where in a poor man's covered call, if the short call gets assigned, the broker may allow you to buy 100 shares to protect the leaps. It'll give you like a little bit of a grace period. I've seen that. That's not going to happen on Robinhood or any of these basic apps. But yeah, no, Robinhood will do it if your short call is assigned early, before expiration, meaning like maybe your strike price was 120 and it jumped to 121 for the day, and the buyer of that option exercised it because they're an idiot, because you should never exercise an option before expiration, right? So you get those 100 shares called away from you. Robinhood's going to be like, hey, do you want to buy the 100 shares? You want to buy 100 shares and cover this, or do you want us to exercise the leaps for you? I've heard of that happening. But yeah, you don't need to come up with the money. Why do you hate Helion? I don't hate Helion. I don't hate any stocks. Actually, I hate Nikola. But no, I don't hate them. I'm not touching them. Just not touching them. I don't hate any stocks. Big plans this week? Yeah, I'm going to Austin, Texas. Big plans. Going to Austin, Texas. If you're in the Austin, Texas area and you want to drink bourbon, let me know. I'll be there. Right on, Jeremy. Any other questions, guys? Oh, man. All right. I wanted to get to the thing I got about weeklies and stuff, but I'll save that for maybe during the week. I'll go live maybe tomorrow, guys. It's been a long day. Oh, good. More questions. I know you like Vuzi. Any thoughts on Microvision? Don't know anything about them. Correct. Bourbon is from Kentucky, but you can drink bourbon in any state in the nation. Write that down. Lots of lives. All right, guys. There's no questions. Thank you for your time. We'll get out of here in just about an hour tonight. I'll drink this red, white, and blue upstairs with my wife. But, yeah, don't be a stranger. Thank you so much for your time. Guys, please, there's a voicemail in there. There's some great questions in the chat. Leave them. Leave a voicemail. You know, I'll do it. I don't know where you are from, but went to Austin around this time 3 years ago, and it was hot AF. If you're not from a hot area, then be prepared for the worst. I'm currently in New York. I know that Austin's gonna be hot. I got some shorts. I'm ready for hot. I'm going to a convention, so I'll be in the convention center most of the time. But yeah, no, I could do hot. Bourbon is king. Bourbon doesn't suck. Cubby, thanks so much, buddy. Thank you. Queen, where'd you ask a question? Oh, Queen, sorry. I bought a 140 Leap UPST. It's up 250. Now I want to exercise it. Sell to close. If it's up 250%, sell to close. Don't exercise. Do not exercise. Here, Queen, let me just put this. Let me do this for you. And this is for anybody that buys options. You can go to Brad Finn, don't close. I think it used to be called like stop setting things on fire. Hold on. Let me share this. Queen, do me a favor. Watch this video. Okay. That is why you want to sell to close when you're up big, because that up 250% isn't up 250% on the share price. It's up 200%, 250% on the options value. So if you exercise it, you're not going to get 250%. You're not. If you sell to close, you are going to get 250%. There's a big difference between closing your options and exercising it. So I'm not telling you what to do. I'm not a financial advisor. All I have to say is, please, before you exercise, watch that video and consider selling to close before you exercised. Hope that answered your question. And if you sold a ton of calls against it, then you're winning even more. That's what we like to call kicking ass and taking names. My call is at 140. Yeah, sell to close that shit. San Antonio Riverwalk. I'll write that down. Thank you, C-Night. Cheers. All right, guys. Until I get you on the next one. We will not be live with JJ. Oh, if it's not expiring until 2023, then hold it. If it's up 250 now, let it go up to 1,000%. You bought it for 2023 for a reason. Let it go. Unless you think that you got lucky and it shot up and it's going to go down into the gutter, then get the hell out of it. But if it doesn't expire until 2023, good. Enjoy that 250%. Hopefully it goes to 5. Sell to close on green days only. Yep. We sell to close on green days only. There will not be a Wednesday live stream with JJ Buckner and I on Average Money this week because we will be in Austin, Texas. And there's a pretty good chance that I will be live next Sunday because I'll be home from Austin. I get home Saturday night. So, yeah, we should be able to go live on Sunday. I'm humbly blessed by you guys. I do think it's bullshit, but this stuff makes my clock tick. I appreciate it. All 27 of you here. Like I said, when we started this, for those 3 people that were here when we started, and I said, doesn't matter if there's 3 people here or 3 million. I appreciate every single damn one of you. Enjoy your night. Enjoy your weekend. Tell the people around you that you love very much, that you do love them. Until I see you guys on the next one, stay positive. Work really, really hard, and always, please, I beg you, just try to be kind to other people.